Hello and welcome to the Weekly Outlook at XM.com. I'm Maria Pashurdis, and joining me is lead investment analyst Rafi Boyajian. We'll be reviewing the week ahead. So Rafi, it will be a busy week with several central bank meetings coming up. Let's start over in New Zealand with the RBNZ. Markets are pricing in a possibility of rate hikes earlier than first predicted. Why is this happening, and what do you think we'll hear from policymakers when they meet on Wednesday?
Well, we just had some very upbeat business confidence numbers out of New Zealand, and it was much stronger than expected. So investors have, in fact, brought forward the timing of when they believe the RBNZ will begin raising interest rates. Now, previously, the markets were expecting August 22 as the likely date. Now, this has been brought forward to November of this year. So that's quite a dramatic shift in expectations. And that's because even though we do have worries about this Delta outbreak, New Zealand really, because of its tight border controls, hasn't been exposed yet to another outbreak. So the RBNZ really has no reason to delay tapering. And in fact, markets are predicting they will have to begin tightening much quicker. The question is, does the RBNZ agree with this market bet? Because they might see it as being way too aggressive, because it's quite a shift from August 2022 to November. And although we're not going to have any press conference after the meeting, nor we're also not going to see any updated forecast, the RBNZ might try to pare back these market bets by perhaps sounding more cautious in their statement. The question is, if they were to do that, would this really have a huge impact on the Kiwi? Probably not, and that's because the New Zealand dollar didn't really benefit from this shift in expectations, because it was weighed this week by this big risk-off mood we have in the markets, and of course the very strong US dollar. So because the Kiwi didn't really rise there's probably not going to be a huge sell-off should the RBNZ try to push back on those expectations.
Okay, now the Bank of Canada and the Bank of Japan also have meetings coming up on Wednesday and Friday, respectively. Are we expecting any changes in policy for either bank? And what reaction can we expect to see in the Canadian dollar and Japanese yen?
Well, the Bank of Canada has already started to officially taper its pandemic emergency stimulus. They have already reduced their weekly bond purchases twice already, and they're probably going to do that again next week, reducing their the pace of purchases from 3 billion Canadian dollars to 2 billion, and they're also going to publish a set of updated forecasts. Now, this will be interesting to watch because markets will want to see whether the BoC still expects to raise rates in the second half of next year, or whether the BoC now sees perhaps an earlier hike. And this is because the Bank of Canada did publish its business outlook survey, which showed that business confidence was on the rise, and the Canadian recovery was broadening. So we're likely to see a more upbeat Bank of Canada, and all in all, it will probably be, the meeting will probably be quite positive for the loonie, even though, like the Kiwi, the Canadian dollar has been somewhat weighed down by this risk aversion we're seeing in the markets right now. Now, as for the Bank of Japan, they will probably buck the trend, because Japan is now seeing some signs of a virus surge in Tokyo. Tokyo has been placed back under restrictions, especially in the run-up to the Olympic Games, and other regions. They're only now just coming out of state of emergency. So although the Japanese recovery did get off to a smooth start, it has got a much bumpier, and the Bank of Japan, there's a strong chance they will revise down their growth forecast for the current fiscal year. Now, as far as the yen is concerned, the yen, of course, is a safe haven, so it's really benefited from this risk aversion in the markets. So a more downbeat Bank of Japan probably won't do much to hurt the yen, unless, of course, we do see a return of risk appetite by the time of the meeting next Friday, by which point a more negative Bank of Japan might perhaps accentuate any sell-off in the yen.
Looking at China now, we'll get GDP numbers for the second quarter on Thursday, as well as monthly readings for industrial production and retail sales. What is this data likely to tell us about economic growth in China?
We are seeing quite a bit of worry in the marketplace that growth in China is slowing down and the recovery has peaked. Now we've had some regulatory action in China, some crackdowns, maybe some tighter liquidity, and all of this might have impacted the growth picture there. And on top of that, we now have this Delta outbreak that has also kind of darkened the mood a little bit. So if you were to see worse than expected numbers, that would underscore the view that China's rebound has lost some steam and could further hit risk appetite, not just in China, but globally as well. On the other hand, if you were to see some better than expected numbers, that would come as a huge relief, and it could, in fact, lift the market spirits.
And finally, over in the US, the CPI report for June on Tuesday and retail sales figures on Friday will be the main highlights. How might this data affect the odds of earlier tapering by the Fed?
So that is interesting because we just did have the Fed minutes, and in fact we saw the Fed is in no hurry to begin tapering, that the decision could still be months away. So if the recent surge in inflation hasn't really changed the policy course for the Fed, then the June CPI numbers probably won't either. So there's probably going to be more focus on the retail sales numbers that are due on Friday, because there have been signs that consumption is slowing because the effects from those stimulus payments we saw early in the year and the boost from the reopening of the economy, those appear to be fading. And analysts are forecasting that there's going to be no change in retail sales for the month of June. And that would be perhaps slightly worrisome and could maybe weigh on the dollar a little bit, but on the whole, although there's been a lot of speculation about the Fed tapering, the timeline of Fed tapering hasn't really changed dramatically, and we're probably going to see that either next week either, but it could sway. If we were to see a surprise strong retail sales print, it could perhaps sway bets towards maybe an early or slightly more aggressive tapering, which would lift the dollar even further.
Rafi, thanks so much. And thanks for joining us at xm.com.